Okay, good afternoon, everyone. The topic which was given to us is actually very, very interesting and personal for me, especially when I stand here as a representative of Quantum Mutual Fund. Uh, Before I jump onto the topic, I think if we look at last 20 years, 25 years history of mutual funds, and me, all have been participants in this journey, the journey has actually been very, very fruitful for all stakeholders. When I say stakeholders, I mean to say it is the manufacturers, which is the AMC, the distributors, which is people like yourself, and also our clients who are at the third end of the spectrum. In short, we have all been beneficiary of the journey, the growth the industry has witnessed. And today, when we talk about partnerships, I personally think that if we both work together, we will not only do better for the third participant, which is our client, which is our investor, but also we will be able to grow together. And that is the power of partnership, in my view. I will like to begin with some data points which actually talks about how the journey of mutual fund growth has panned out, and this is only for the period of past 15 years. I'm proud to say that I work in the industry which has actually grown 10 times in past 15 years. It is very difficult to find an industry today which has grown at this pace. And as we sit here today, I'm sure all of us are bullish that this industry will continue to grow, and we are just scratching the surface. Sorry, sir. Concern. I will come to that. Concerns obviously are there, but if we look at past 15 years where we have witnessed maybe one, two major events, in spite of that, our investors have been today a happier lot that they decided to invest their money in mutual funds. Hence, the industry has grown. We were we are currently at around 60 trillion Indian rupees in size, which was only around 6 trillion rupees about 15 years back. So we have grown 10 times. This is just a slide which talks about that journey. Last one year has actually been more interesting, because if we look at only the last 1 year, the industry has actually grown by whooping 35%. We were roughly around 42 lakhs crore about a year back, and as we speak today, we have already crossed 60 lakh crore. That's a jump of 35%. I don't know how many stocks have actually delivered that kind of return. But clearly highlighting that the AUM, the growth of the mutual fund industry is phenomenal, and all of us as a stakeholders have been beneficiary of that. If we look at how the folios have grown, and it is only a subset of what I just covered, as we speak today, we have close to 19 crore folios active in mutual funds with different participants with different AMCs. And this is all thanks to you, your clients, that you have actually managed to convince them. You have actually managed to get them on board. If we look at, one second, this seems, yeah. SIP, even SIP has been, or rather is one of the most favored investment option which is available today. And today, the outstanding SIPs in the system have shown a very, very strong and robust growth. Even the new SIPs which are getting registered are actually at a very, very faster pace. So at Quantum Mutual Fund, how do we really define partnerships? And when I say talk about partnership, it is essentially uh, a, a journey which is basically started by two people together, and obviously they have grown in this long journey, and there are many destinations, many uh, many destinations to come where we will partner together, we will continue to grow together. Uh, Typically, when I look from the AMC standpoint, we have mutual fund distributors like yourself who are uh, partners with us, who do business and we do business together. Also, various banks, private banks, PSU banks. We have new set of channel which is coming up, which is obviously in the form of fintechs, the RIAs, online RIA, offline RIA. They all have been participating in this journey. We have national distributors, and for people like us at Quantum and other mutual funds companies, we have direct investors also with whom we partner, we educate, we add value to their investment decisions, and we try and provide the insights of the AMC directly to the clients and help them in taking the investment decisions. So all these people are basically partners for people like us, and we truly are thankful for with our partners who have been supportive in growing the AMC industry and taking it to the height of 60 lakh crore as we speak today. I would like to also, in the second part of my presentation, speak to you about what quantum really is. And mind you, we are not quant, we are quantum. And there has been, I personally have encountered, or we keep getting queries on a daily basis about the redemptions, the purchases, various issues which have cropped up with the other peer set of ours. And we we initially decided that we will not be commenting on it because it is not our issue, but we were forced to release a statement in media and clarify our stand. So just to tell you or that what quantum is, and I'm sure most of you after going through a couple of slides will say that if quantum is doing so many things, then why our AUM is so low? And answer lies in the first topic, or the topic which is given to me, which is the partnership. We need to work upon partnerships with people like you so that we can also participate in this growth journey. So just to take you with some background of ours. Okay, I will. Neha, there seems to be some problem with the slide change. Yeah. So this is a company which was started by a gentleman called Ajit Dayal, who used to be the fund manager with Vanguard in USA. He started Quantum Advisors in the year 1990, and the company called Quantum Advisors Limited was established. We as an AMC are 100% owned by Quantum Advisors. What does Quantum Advisor do? They manage foreign money to the tune of around $2.3 billion, which accounts to roughly around 20,000 crore. We bring in the foreign money to manage in Indian portfolios, and we try to provide the same kind of portfolio to the Indian investors as well. So at the portfolio level, there's hardly any difference. However, in terms of AUM size, there's definitely a difference. So Ajit started this company in 1990, goes back to 35 years behind. And the AMC Quantum Mutual Fund was established in the year 2006. So we are present in Indian market since the year 2006. And we also boast of couple of initiatives which were actually first, even before SEBI announced some good practices, some transparency practices in the industry. We actually incorporated those practices probably 2 to 3 years before. We also believe that no star fund manager can actually come out of quantum, because it is after all about teamwork, it is about strong research, and we do not believe in the concept of star fund managers. Hence you will probably not hear any outstanding fund manager doing very well from the house of quantum. It is actually the team effort. Currently we manage close to about 3,000 odd crore in terms of AUM for the AMC. Now, this is an interesting slide, and probably you will also would want to look at it little more closely. There are some transparency initiatives which are taken by SEBI for the betterment of the industry, for the betterment of clients, and keeping their clients' interest at the forefront. And whether it is about refusing to accept the entry load from the beginning of 2006 when the AMC was established, or whether it is about introducing only one scheme per asset class, the initiative which was launched by SEBI in 2017, but we have been practicing this since 2006. Whether it is about introducing of only single plan, no, not differentiating between a retail investor or a institutional investor, charging less to institutional investor and more to retail, we decided to have this practice since 2006. It was introduced by SEBI much later. In terms of investor education, which is currently the one of the favored topic that we discuss, we actually have been doing investor initiatives for past 16 to 18 years now. The concept was introduced by SEBI much later. We also decided that we should be following the practice of total return index, which is actually the right way of calculating the performance and looking at the returns. And while we have been doing this since 2006, launch of funds since 2006, however, SEBI decided to launch this practice much later. So the point I'm trying to say is that we have been, since inception, we have been actually guided by some very, very strong principles of keeping investors first. So much so that we have actually sometime ended rubbing our distributor partners at the wrong end because we have always decided to keep the investors first. However, things have started to change from the time then when the upfront commission was banned, and we decided that this is a time when we should also be coming out and talking to partners like yourself and take the journey forward rather than only looking at the direct investor share class. So since last 4 years, we have been pretty active in reaching out to the partners, keeping the investors' interest in mind. We have also have got a team of 30 research analysts who are working full time with us on the equity side, which is one of the largest team which is present, research team which is present in AMC industry. Also, if I talk about a little about our funds, we have got a bouquet of 13 funds. However, the differentiating factor is, and probably we are the only AMC which is actually following this model, is something which talks about the upside potential of the scheme. Simply put, today standing at this dais, I can actually tell you what my scheme is likely to deliver after 2 years' time. And we have been following this model since 2006. And let me just show you what have been the results. So this is a scheme which is the flagship scheme of ours, which is the value fund. We launched this fund in 2006. And from that time, we have been actually declaring what is the likely return of the scheme after 2 years. And the blue line actually tells you that we have been very, very close to what we have predicted, barring 2 events. One was obviously the GFC, global financial crisis, and second was COVID. Barring these 2 events, we have more or less been able to identify what will be the returns of my scheme after 2 years. If we talk one-on-one, I will be able to share what is our thought process and upside potential chart, which is telling us the returns of the scheme likely after 2 years. A very, very powerful tool to give you some kind of visibility, certainty as to what can you expect for your clients for the scheme to deliver after 2 years' time. I have been part of mutual fund industry for last almost 18-20 years, and I have not seen any calculation like this, and which has been so correct in their predictions. Moving on, how do we do it? We have one of the longest serving equity portfolio team. As I mentioned, Mr. Ajit Dayal founded this Quantum Advisors in 1990, and he also, by the way, is the founder of a magazine called Money Equity, which is actually the pioneers in equity research and have been providing equity research for past 30-35 years. Uh, the team size is, as I said, is around 30 people. We also launched another tool which is very effective, which is called Integrity Screen. Now, what does Integrity Screen stand for? It actually filters out companies which are basically poor on governance, poor on ESG parameters, and we have been following Integrity Screen since the launch of the AMC, which is 2006. So what you get by putting your money into quantum mutual fund is essentially a very clean portfolio, uh, predictability of returns, which we obviously do for our value fund. We also are the AMC which actually keeps the investor first. And I just showed you a couple of examples how we are transparent, how we are for the investors and their interest. Why choose quantum? As I already highlighted a couple of points to you, we will continue to be more transparent. We will continue to de-jargonize data points for our investors and partners and communicate them to you, to people like you, to understand the markets better and what is our thought process. These are the list of funds which we already have. We did not launch any new fund till last year, because last year we launched small cap fund when we actually identified the opportunity and we found it to be rational to be doing this for our clients. But as we speak, we are currently having 13 schemes, and the schemes have got track record as long as 17 to 18 years. What do we offer to you? Obviously, commercials are one, but we are basically, we offer exclusive partner login on our website where you can do all kind of transactions, whether commercial, non-commercial. We also empower our partners by offering them a very simple tool, which is basically co-branding. So one pages, fact sheet, any material that you get from quantum can be co-branded with your logo on it and can be circulated to your respective clients. We do fund manager sessions with for knowledge sessions with the fund managers, giving you regular updates about the market, our thought process. And also we do a lot of events for our clients, giving them perspective of what our view on the market is. These are just the slides which actually highlight more on the business enablers. So this is my last slide, which actually talks about what I already covered. So the question which actually you should be asking is that why are we so low in AUM? Obviously, the way I look at it is that we have only one way to go, which is basically moving up. We have been trying to reach out to many partners across India. Today we have a team strength of close to 50 plus people. In Calcutta, we have people available who will eventually reach out to you. What I can assure you from this dais today is that if you look at quantum, obviously each fund house has got their own USP. The USP at quantum is that you will be getting a portfolio which is I would say a true to label portfolio with some kind of predictability of returns that you can at the time of investment only know what is the likelihood after 2 years, and a lot of transparency which will ensure that at all points of time your investors money is safe with us. And it will be our endeavor to reach out to all of you in next coming few months and take our messaging forward, discuss more in detail with you. So with this, I have 1 minute left, but I end my presentation. Thank you so much. If any question. Yes, sir. You'll have to go at the back.
Sir, since you have talked about the predictability of the returns, so one thing could be the portfolios are the portfolios might be, it's a random case because I don't work directly with the quantum mutual fund, but one thing might be the portfolios are quite aligned with the benchmark indices. Whatever benchmark indices are there, the returns might be similar to the returns. Second part is, which is my real question, if there is a model to have the predictability after 2 years, can you guide us, what kind of returns you are looking at your value fund after the 2 years? Let's say I invest today 10 lakhs.
Uh, I'm I will be happy to answer your second question. However, it may come as a disappointment to most of you because what we are analyzing at these market levels,
Mm-hmm.
our predictability upside potential chart indicates that next 2 years equity markets will be delivering returns in the range of 10 to 12% and not more. And I'm talking about 2 years out, not 1 year return. So essentially, we are looking at maybe a single digit kind of return which my portfolio will deliver, and I'm sharing this information openly because this is how we do the business. We do not want to sound too optimistic or give you some figures which may not be convincing or where my fund manager is not confident to deliver. So at this stage, we are at these market levels, we are not very optimistic on equity as a asset class, and this is how it is.
Sure, sure.
Sure.
So would you like to tell me on a one-on-one basis, obviously after this presentation, what are the quantums of the predictability chart actually?
Sure, sure, I'll be happy to answer.
Thank you, sir.
Thank you.